as Reena said, my name is Lauren Brier. I'm an associate attorney with PilieroMazza. I have over 6 years representing commercial businesses in a variety of government contracting and litigation matters, many of which deal with Department of Defense contracts across the world and specifically in the Middle East. A large portion of my practice centers around assisting contractors with supply and service contract disputes with various agencies within the federal government. As I said, some of which take place overseas. Some of the contractors I assist are foreign owned, and I see a lot of common mistakes that are made by them, especially when they're just starting to do business with the federal government. The purpose of this webinar is to provide those attending with some basic information on how to best position your foreign company for success when contracting with the U.S. government. And I think it can help those attending understand how to avoid potential contract disputes in the future and potential pitfalls. Another thing I'd like to do is just introduce the law firm as a whole. So PilieroMazza serves government contractors and a lot of commercial businesses from across the U.S. We represent clients in a lot of different areas that can be seen from the slide, including but not limited to like bid protest, government contracts, which is my area of expertise, labor and employment, litigation and dispute resolution. We have a large business and transactions practice, and we also assist with False Claims Act issues, audits and investigations, and just kind of the gamut of things that circle government contract practice. So the first thing that comes up when a client that is foreign owned comes to us for advice as far as doing business with the U.S. government is, where should I be operating? Where should I establish an entity? And my biggest piece of advice for those wanting to do business with the U.S. government is to first establish a business presence where your company intends to do business. So if your company wants to focus on submitting bids or proposals for a project, say specific to Afghanistan, which I have some clients that come to me about that, your company will obviously want to establish a business presence in Afghanistan and understand the appropriate steps to do so. So like more specifically, if you're intending to bid for projects domestically or US-based, you'd obviously want to establish a business presence in the state or locale within the US, which is especially beneficial. So by doing this, not only are you presenting to the contracting team when reviewing the bid that you prepare that your seriousness about the project and your intent to perform a high standard, it also makes it much easier on the contractor to have direct oversight of the project. So for instance, if your company intends to perform construction projects in Northern California, which I've had clients come to me about as well, to best ensure success on the project, it is highly recommended that the company establish itself not only in California in general, but within the closest radius of the project as practical. So it just provides the appropriate proximity and appropriate oversight capabilities if you're located as close to performance as possible. The next tip that we recommend to our foreign-owned contractors is to determine the basic legal structure and registration requirements that are included within the solicitation that you may be interested in procuring. So when establishing a business presence domestically or abroad, it's imperative to understand the different legal structures available to your company for establishing a business presence. For instance, if you're establishing an entity in the United States to do business in, say California, common business structures in the U.S. include partnerships, limited liability companies, and corporations. It's best to understand what entity is best suited for the project that you're performing. For foreign corporations specifically, we often recommend that they use the same name of their parent company when registering in the U.S. just to keep things streamlined as far as contract and billing. To understand business registration requirements in the U.S., state-specific websites often provide appropriate steps for registration. Like if you're interested in registering, again, in the state of California, you can just go to entity registration in California. They have, the government website can provide you with a step-by-step guide of how to do so. And again, PilieroMazza, we often assist our clients with establishing business presence across the United States as well as abroad. So for outside the U.S., one of the websites that we have found to be extremely helpful in assisting our clients in registering, say we have a client that's U.S.-based that's interested in performing in Kuwait, or if we have a client that's located in Afghanistan that's interested in performing in Qatar. A lot of times going to the World Bank website, they provide information on business registration and cost requirements tied to that registration for various countries. So registration requirements differ obviously among countries as well as states, but a lot of times just doing some basic research can provide you with step-by-step guides, and then also reaching out to us, we can, provide some guidance on that. So then moving to what is actually required on the U.S. side as far as contract registration process to perform on a federal contract. There's 3 big registrations that you want to consider. So there's the Data Universal Numbering System registration, which is termed as the DUNS registration. There's the System for Award Management registration, which is the big ticket item, and then also commercial and government entity registration. I'm going to go into these 3 in more detail, but these are the 3 big registrations that you want to complete before you begin doing business with the U.S. government. There's also certain host nation registrations that you need to be wary of. For instance, like I said, I assist a lot of contractors that do business in Afghanistan. If doing so, the business has to register, and to do business with the U.S. government in Afghanistan, that business has to register with AISA, which is the Afghanistan Investment Support Agency. Foreign contractors also have to ensure that they get what's called an NCAGE, so it's a NATO Commercial and Governmental Entity Registration. And then another registration requirement for those wanting to do business with the U.S. government in the Middle East have to ensure that they have a JCCS registration, which stands for the Joint Contingency Contracting System. And basically, the JCCS registration allows the U.S. government to do sufficient vetting of federal contractors and their employees who want to do business in the Middle East. So it is a standard requirement. So these are just examples, but if you are a federal contractor and say you want to do business in Italy, it is for the U.S. government, it is very important that you understand the certain registration requirements that come along with it, because sometimes those are overlooked. A client will submit a bid and then they'll lose out because they're missing a certain verification, certification requirement, or appropriate registration. So like I said previously, the big ticket item is the System for Award Management. So focusing first on that, a company looking to do business with any federal agency is required to register on SAM and maintain an up-to-date record through annual renewals. So basically what the system does, and you can search it on beta.sam, sam.gov actually just migrated over to beta.sam. So if you haven't looked at it recently, it may look a little bit different, but they basically streamline the process to make it a little bit easier to use. But the system provides a modern portal for entities to register and update and renew and check the status of their registration. So federal and non-federal users are actually able to search for registration, solicitation. So say you're interested in a procurement that you've heard of. Even if you're not actually registered in SAM as an entity, you can search for opportunities on beta.sam. Prime contractors that are already registered also use it, like I said, to search contract opportunities and to identify potential subcontractors and suppliers that may assist them. So say you plan again on doing business in the Middle East, it could be an avenue for you to search, other contractors in the Middle East that you might want to subcontract with. It's very, very much a great resource. And as far as getting registered, it's not too complicated. But even state and local governments sometimes consult this database to find potential vendors for work. So it's definitely a good rule of thumb to make this your first priority if you intend to do business with the federal government. In addition, all businesses, nonprofits, and units of state and local government have to be registered in SAM in order to receive federal payments. So there's a lot going on this website, but it's pretty easy to navigate now that they've migrated it over to this beta.sam. But again, if somebody gets on there and has questions, you can always feel free to reach out to me directly, and I'd be happy to assist in any navigation of the system. Before registering, your company will first have to create a login. Again, this is pretty simple as far as getting the company name registered. The other things that you have to think about before you even begin registering on SAM, though, is to make sure that your entity has a bank account set up. Another thing you're going to need to finalize the registration on SAM is an employee identification number established with the IRS and a DUNS number. So what is a DUNS number? So like I said, you need this number to register your business entity in SAM. There's no charge to register or maintain the registration record in SAM, but what it is a unique 9-character number that's used to identify your organization. So the federal government uses this number to track how their money is allocated. So each entity that is registered in SAM has their own DUNS number, and registering for it is free of charge. So if you encounter any organizations or websites that are soliciting a fee or like a charge to acquire a DUNS number, it's likely a scam. So it's something that you just want to be wary of as you are going through this basic registration process. Some of the information that you're going to need just to obtain a DUNS number, and it can be obtained through the link that I provided on the slideshow. Your name of the name of the organization's address, the name of your CEO. They'll ask for the legal structure of your organization, the year it was started, and the total number of employees. These are just some questions that they're going to ask before they generate the DUNS number for you. So the next thing that you're going to want to obtain in order to get registered in SAM is a tax identification number. So you'll need a tax ID number. It's usually your employer identification number assigned by the IRS. One thing to note is that foreign entities that do not pay employees within the United States do not need to provide a tax ID number to register with SAM. So if you do not plan to operate in the United States, this is something to consider as you register. The EIN application can be electronically submitted at any time. We often assist clients in submitting these applications. You don't have to wait for your entity formation documents to be filed or processed before filing for an EIN. On the slide, I've provided the instructions on how to apply for it, so you can just click on that link and it will provide you with a step-by-step guide of obtaining an EIN. And we often suggest that you allow approximately 2 weeks before your new EIN is ready for use when you're registering in SAM. So the next suggestion that we make to our clients that are registering in SAM is opening a bank account, likely in the locale where you're going to be performing. Establishing a bank account for facilitating the cash management component of your business is key. As your business grows, having a business relationship with your bank also becomes increasingly important. A lot of our clients, as they continue to grow, I mean, this is key for them as far as credit relationships. Another example, you may want to set up a dedicated account to handle the payment of income, sales, or payroll taxes tied to a specific contract. Again, that also assists with streamlining of payment and also record retention. And I'm going to touch on that later. You might also want to, like I said, establish a relationship for credit purposes. This could include obtaining bank financing to purchase equipment or to expand your business as you grow. So the next registration requirement that's a big one is the CAGE or NCAGE code. So what the CAGE code is a 5-character ID number that's used extensively within the U.S. federal government. It's assigned by the Department of Defense Logistics Agency, which is referred to as DLA. And what the CAGE code does is it provides a standardized method of identifying a given facility at a specific location. So CAGE codes for entities located outside the U.S. are called NCAGE codes. So NCAGE codes for more foreign-owned companies are assigned internationally as part of the NATO codification system, and they are required for all foreign entities, or the registration and SAM will be considered incomplete. So according to the FAR, which at part 4.1800, the CAGE codes are used most commonly to exchange data with another contracting activity. So a lot of times federal agencies will use this CAGE code to share information with each other on a specific entity. Especially like if you have 2 different agencies managing contract activities that you're working on, they may share information between each other. They may exchange data with another system that requires a unique identification of a contractor entity. It also helps identify when offers are owned or controlled by another entity. It helps government agencies understand the true ownership of different companies. So your CAGE code expires every 5 years based on the last time you've updated your entity registration in SAM. But if you update your SAM profile annually, which we often recommend, you'll automatically be renewing your CAGE code information. So a CAGE code or NCAGE code is automatically assigned to you once your registration in SAM is complete. And once it is confirmed by DLA that your business has no duplicate registrations, we tell our clients, is often processed within 10 business days. So you'll get that CAGE code from DLA within that time. This slide just identifies where you can obtain NCAGE codes, which are needed for a foreign entity. So again, you can just access or click on that link, and it should provide you with the appropriate web page in order to get the NCAGE code for registration with SAM. So the next big piece of advice that we have for our foreign clients that are considering doing business with the U.S. government is to start small. So by starting small, we often say it means starting with a subcontract. So once you're registered in SAM and you've completed all your registrations, your entity is established, and you're eligible for contracting with the federal government, we recommend that you start small to subcontract through a more seasoned prime contractor. So you do want to do some vetting to make sure that your prime contractor has, sufficient past performance. They have an appropriate presence on the internet. You just want to make sure that you vet them before you even think to engage in a subcontract with them. When a contract is issued for goods or services under a government prime contract, it does become a subcontract. So as a subcontract, the transaction with the federal government becomes subject to additional requirements. So it is a little bit different than entering into a commercial subcontract. And the reason for this is that there's all these additional requirements imposed on a prime contractor that requires that certain federal acquisition regulations, which is termed as the FAR, get flowed down to your subcontract. So these additional requirements cover all aspects of the contractual relationship, including the decision to buy, like your selection of a supplier, the pricing of the contract, the terms of the contract, quality requirements, and even payment requirements. So it's definitely important to understand what federal acquisition regulations will be flowing down into your subcontract. The reason why we suggest that this be done before you engage in a direct contract with the U.S. government is because it gives your company some time and opportunity to navigate whatever country you're performing in on behalf of the U.S. government, that country's market of goods and supplies and its changing landscape. A subcontract will also give your company the ability to negotiate with host nation subs and employees with less contractual requirements and a smaller performance schedule. So although you are bound to certain FAR flow down clauses, it's not as heavy as engaging directly with the government through a prime contract. So it does give you a little bit more freedom of movement of performance requirements. And then it also, and I think this is one of the biggest things, it helps your company build past performance. And past performance is very important for our clients because it's the information and that's used as an indicator of future performance by the government. And it's one of the most relevant factors that a selection official often considers when awarding a contract. So if you're bidding on a direct contract with the U.S. government and you have, various subcontracts that you've worked on for a prime contractor on behalf of, say, GSA, the various federal agencies will look at that past performance and see, that it's sufficient, if not satisfactory or outstanding, and vet you as an appropriate contractor, if not, viable for award. So it is a really good place to start to build out your past performance because that is a big evaluation factor when the government is looking to procure services or supplies. The next big tip that we have for our foreign clients is to ensure that they engage consultants with experience working domestically or internationally with the U.S. government. So again, it really depends on what type of projects you're looking at. If you're looking at, projects in Afghanistan, for example, like you would most likely be performing on a military base. So what type of consultant would you want to be looking for if doing so? Probably a former contracting officer that may have worked on that base. To act as your project manager, or somebody that has appropriate clearance to get on base in Afghanistan. So one of the largest hurdles, that many private foreign contractors face when working with the government, especially abroad, is a lack of access with contracting personnel. And again, especially if the performance is on a military base, and that's because it's very difficult to get on base unless you are a U.S. citizen, or it's just easier to access contracting officials if you have, a U.S. driver's license or a U.S. passport. It does tend to streamline things if you're able to find a consultant that has that background. And we often recommend that just to make it easier as far as progress on a project. Host nation contractors and local employees often have to engage in complicated vetting processes to achieve access, especially to U.S. military bases. So again, if you can engage some type of consultant, and there's many out there that could assist you on a project in, say, for instance, the Middle East, we highly recommend that you do so. Your company, again, like I said, can ensure face-to-face contact with appropriate authorities by hiring, say, an American consultant to lead performance and contract operations in a host country. Oftentimes we recommend, even for engineering, sometimes it's helpful to have an American-based consultant if you're performing on base. So these are just, again, recommendations just to make the process easier and to avoid future disputes down the line. The next thing that we suggest is that you implement appropriate hiring and vetting processes for employees and subcontractors. One of the large hurdles that many of our clients face is certain employees will get flagged and recommended for termination, and it can oftentimes disrupt progress of performance or construction. The federal government also requires that certain contractor employees with access to varying levels of classified information hold appropriate security clearances. The levels of those are usually confidential, secret, and top secret. We highly recommend that you implement appropriate vetting processes to ensure if bidding on contracts that require access to such classified information, that you are appropriately vetting your personnel that you're putting forward in your bid or proposal to ensure, and prevent issues down the future where, the government might identify a certain individual that they don't actually have the appropriate clearance that you said they did. Again, to avoid that type of dispute in the future, it is very important that you implement some type of vetting procedure to ensure that your employees say who they are who they say they are. It's also, like I said, to that point, that it's important to conduct appropriate and extensive background investigations to determine overall suitability of personnel. You definitely want to make sure that you verify that candidates hold all valid certifications required to perform job duties, and that you do a continuous and ongoing vetting of personnel. And to provide a more practical application of where this could go wrong, when contracting for the U.S. military in the Middle East, if contracting officials say discover your company is doing business with or employing a member of the insurgency or a related member of the insurgency, the contractor will immediately be deemed ineligible for award, blocked from base, and terminated. That is another reason why the U.S. government, for contractors that are performing in the Middle East, are required to register within the JCCS, or the Joint Contingency and Expeditionary Services website, because that does a sufficient, or what they believe is a sufficient vetting of contractors. If there's a risk assessed, then you will be blocked, and it is very, very difficult to get off this blocked list. I've had clients that have been blocked, and it's taken them 6 months to a year to 2 years to just have a conversation about getting removed from the blocked list. So again, it's very important that you do an appropriate vetting of your employees to make sure that they are in the best position to succeed on your project and will not raise any red flags with the federal government. So another tip that we give to our foreign contractors is, and this may sound a little cheesy, but we really think it's very important as far as hiring those who believe in your mission. One of the things that we highly recommend, and the reason why this is so important, is to avoid employee turnover. So we see a lot of clients that don't implement these types of processes, and employees just leave in the middle of projects, or they run into certain delays because employees are leaving, or they deal with certain labor shortages, and it causes a massive disruption in performance, whether it's providing supplies or services. And the more turnover you have, the less productive of a company you become. So this list of 5, we find to be very important, as our most successful clients definitely implement all 5 of these. So providing educational programs and training courses for employees, oftentimes specific to projects that they are working on, is very helpful. Considering offering on-site accredited programs for staff, and this is not just domestic, this is also abroad. It's just really important to teach your employees up. And then conducting periodic checks for job fit, satisfaction, advancement training, also providing employee assistance programs, and those are super important as well. And the reason for those is that they generally offer free and confidential assessments, short-term counseling, referrals, follow-up services for employees. It just makes an employee a happier person and more likely to successfully perform on your project with the federal government. So these are all very useful. And then another thing that we actually use at our firm is using surveys to identify if personnel needs are being met. It's always good to check in on your employees and make sure that they're happy and satisfied as they're doing their work. It just makes for a better working environment. So getting into the more complicated stuff, another requirement or recommendation that we have for our clients is acquiring Defense-Based Act insurance coverage. It is important that foreign contractors working overseas, especially acquire Defense-Based Act insurance coverage. The DBA provides workers' compensation protection to civilian employees working outside the U.S. on U.S. military bases or under a contract with the U.S. government for public works or for national defense. Federal law requires all U.S. government contractors and subs to secure workers' compensation insurance for their employees working overseas. So this requirement will be likely built into a solicitation. Again, if you're considering on doing working overseas with the federal government, you'll see reference to this within a solicitation or a contract that you intend to bid on. Basically, the DBA is designed to provide medical treatment and compensation to employees of defense contractors that are injured in the scope and course of employment. And the DBA is actually administered by the Department of Labor. So you might be asking, like, what type of coverage is provided under the DBA? So the Defense-Based Act covers the following employment activities: working for private employers on U.S. military bases or on any lands used by the U.S. for military purposes outside of the U.S., including those in U.S. territories and possessions. The DBA also covers those working on public work contracts with any U.S. government agency, including construction and service contracts in connection with national defense or with war activities outside the U.S. It also protects those working on contracts approved and funded by the U.S. under the Foreign Assistance Act, generally providing for cash sale of military equipment, materials, and services to its allies if the contract is performed outside of the United States. And then it also protects those working for American employers providing welfare or similar services outside of the U.S. for the benefit of the U.S. Armed Forces. So if you are looking at a contract or a solicitation and it's not clear to you whether, coverage is required to be provided if the Defense-Based Act is implemented into your contract, we do that oftentimes for clients where we'll take a look and determine whether coverage is required. So we do that a lot. And then so what are the insurance requirements under the DBA? They're identical to those found in the Longshore and Harbor Workers Compensation Act, which is often termed as the Longshore Act. And the Longshore Act requires every employer either to secure insurance for the payment of workers' compensation benefits provided under the Act or to be permissibly self-insured. If a subcontractor fails to secure the payment of compensation, and this is a big item here, the prime contractor is liable and will be required to secure the payment of such benefits. So this is really important that when you are engaging a subcontractor where DBA is required, that you understand that the subcontract flows down the DBA clause, so you don't end up hitting the bill. Benefits under the DBA are payable regardless of nationality. Therefore, employers should secure insurance coverage for all of their employees working outside the U.S. under a U.S. government contract, including U.S. citizens and residents, host country nationals, which includes local hires, and third country nationals, which are hired from another country to perform work in the host country. So again, some clients come to us, they don't understand the scope of, the insurance coverage that's required, but it pretty much covers everybody. So, and if the government finds out that there isn't appropriate insurance coverage in place, that often leads to a dispute and potentially a termination. So it is very important that you understand the Defense-Based Act and the requirements thereunder and its application to your contracts if doing work overseas. So this is another recommendation that we make to our clients. I can't tell you how many times I've dealt with a foreign contractor who gets their first contract and then they just have no record keeping processes in place. It causes a huge problem, especially if there's a dispute. We have trouble providing supporting documentation to support any argument as it relates to the contract, or providing proof to the contracting officer that there may be an issue with performance. So it is extremely important, and it's also a requirement under FAR 4.7 that certain record retention is implemented. So like I said, record retention obligations can be found under FAR subpart 4.7. Under 4.703A, the general rule is that contractors shall make records available for 3 years after final payment on the contract. There are some exceptions to this rule. Some documents should be kept for longer. Some can be kept for shorter periods of time, but FAR 4.705-1 actually includes categories of documents which have to be retained for 4 years. Some of these are accounts receivable invoices, carrier freight bills, payroll sheets. So you can access FAR 4.705-1 if you have questions as to whether or not a document that's been generated during performance needs to be retained for 3 to 4 years. But some of our foreign clients don't even know that this is a requirement. So it's very important that you understand these FAR subparts and their impact on your performance. Another provision within the FAR that is also oftentimes overlooked, but it does relate back to records retention. And I apologize, this isn't in the slide, but it's FAR 31.201-2D. And again, I can provide that after the close of the webinar if anybody has any questions related to that. But basically, that FAR provision, it states that a contractor is responsible for accounting for costs appropriately and for maintaining records, including supporting documentation adequate to demonstrate that costs claimed have been incurred, are allocable to the contract, and comply with applicable cost principles in the subpart and agency supplement. The contracting officer may disallow all or part of a claimed cost that is inadequately supported. So like I said before, this is extremely important, especially if you intend to file a request for equitable adjustment. So on a basic contract with the federal government, it has a specific statement of work. If you believe that the government is asking you to perform something beyond that scope of work, oftentimes you can file for a request for equitable adjustment that allows you to recover costs for the item that is outside the scope that you intend to perform on behalf of the government. Sometimes a client will do that and then come to us and say, well, we built this extra bridge that wasn't in our statement of work, and we want to recover the $100,000 that it cost for us to build that extra bridge. And we'll go to them and say, well, provide us with the documentation that supports not only the cost, but the work that was completed and accepted. And sometimes, and I hate to say it, but a lot of times it is with our foreign clients that they just don't have the appropriate record keeping to support this claim for cost. So this FAR provision is a really good reminder as to how important it is to ensure that you're implementing appropriate record keeping and record retention as a requirement under the FAR. And unfortunately, the failure to retain these records that are referenced in FAR subpart 4.7, it can lead to an agency action against the contractor for overcharging. So on the other side of things, sometimes we'll have the agency file a claim against the contractor and say, we paid you way too much for this bridge that you built. And then our client just doesn't have any documentation to defend that claim made by the government. So just another reason why it's really important that you implement appropriate record retention and a record-keeping system. So tying into this point on record retention is the retention of personnel and employment records. So under 41 CFR section 60-1.12 and U.S. Department of Labor directives, personnel and employment records must be preserved. For instance, employers with 15 or more employees must retain applications and other personnel records relating to their hires, rehires, and say you implement test use for employment, promotions, transfers, demotions, terminations or discharges. All that must be kept for 1 year for making the record or taking certain personnel actions. So this is a good example of what needs to be retained. Any personnel or employment record that is made or kept by the contractor beyond some of these issues that I just mentioned must be preserved for a minimum of 2 years. I would say that 2 years is just a good rule of thumb for any of this information. If a contractor has fewer than 150 employees or does not have a contract of at least 150,000, the record retention period is a minimum of 1 year. And I understand that that's the rule, but again, we often recommend that this stuff be held on for at least 2 years. Another huge item, which becomes very important, especially if you run into a dispute down the line with the government, is the importance of understanding applicable accounting policy. So the federal government, in various instances, has very strict accounting requirements that need to be put in place if you're doing business with the federal government. So this could be its own webinar, if not a series of webinars. So again, this is very high level information, but if you do have questions about what accounting procedures may be appropriate for your contract, you can always feel free to reach out to me or the law firm via email, and we'd be happy to answer any questions that you may have. But this is more high level information as far as accounting policies and cost and pricing procedures that may apply. But to give you some guidance, FAR Part 15, Contracting by Negotiation, that FAR section addresses contract pricing and related data requirements. FAR Part 16 discusses the different types of contracts and a certain cost and pricing information that is tied to those, like, what type of pricing information is required for a firm fixed price contract or an IDIQ. FAR Part 16 goes into that. And then FAR Part 31 talks about contract cost principles. It governs the allowability of a cost or which cost can be charged to a government contract. It also sets a standard for what's allowable and what's not allowable. So, like, for instance, while often unallowable costs seem to be legitimate, the government won't reimburse them as part of a federal contract. So, and these costs, whether allowable or unallowable, are distinguished by the FAR. So, like, many of the costs that our clients will come to us and say, well, we spent a lot of money on working on this claim to recover costs. And we engaged your law firm to assist us with getting our claim package together so we could recover costs on this bridge that we built. And unfortunately, the legal fees and the amount of time that your team spent on putting together a claim or a request for equitable adjustment oftentimes isn't recoverable. The same thing goes for certain billing administrative work or proposal applications. That stuff is not recoverable from the government. The government, like I said, has a strict set of accounting principles. If you're wondering what is allowable, I suggest you take a look at FAR 31.201-2. It provides 4 key factors that you can ask yourself as to whether or not this cost is allowable and would be reimbursed by the government. And the 4 key factors are: is the cost predetermined as allowable according to the contract? The second is the cost allocated applicable to accounting standards and practices? Is the cost reasonable? And is the cost allocable? So can it be charged the contract in advance of work? And these are best answered once you have an idea of what the solicitation looks like or what the contract looks like once you start performing. And there are various accountants out there, especially in the DC area, that are experts in determining the allowability of expenses. So again, if you guys have questions as you begin doing work for the federal government, or if you are currently doing work for the federal government and are concerned about the accounting procedures or systems that you have in place, oftentimes we work hand in hand with certain accounting companies in the area to assist our clients with ensuring that they have the appropriate accounting procedures in place to prevent certain issues in the future. And then FAR Part 52, that governs all contract provisions referenced in individual contracts. And then to make it even more confusing, there are also agency-specific FAR regulations that provide more intense and additional accounting standards for defense contractors, and those regulations can be found under the DFARS, which is the Defense Federal Acquisition Regulation, which is actually separate from the FAR. So if we're talking about defense contracting accounting standards, one of the terms you would have to understand is the DCAA and DCAA compliance. So the DCAA stands for Defense Contract Audit Agency, which is a government agency responsible for auditing DoD contracts. Again, if bidding on Department of Defense contracts, obviously it's imperative to understand how to become DCAA compliant through your accounting systems. DCAA audits contracts of all sizes to make sure the military and taxpayers get what they are paying for. And depending on the size of the contract, and we see this a lot with our clients, DCAA may request financial statements, forecasts, information on your debts, other outstanding obligations. Basically, the auditor's role is to ensure properly prepared, complete, and accurate info to give the contracting officer a clear picture of your entity's finances. So that is something to think about when you are bidding, especially on large DoD contracts, especially overseas, that this is likely there is likely going to be some sufficient investigation and oversight as to your finances. So what is DCAA compliant? So being DCAA compliant, it means following DCAA's recommendations and guidance so that your company remains compliant with federal law and that they are prepared for audits. So again, like I said, guidance can be found on the DCAA website. They actually have really great guidance handbooks that you could take a look at. Again, I often recommend to our clients that they engage an accountant stateside that's especially specific to the Washington area that can provide DCAA accounting services. It's really important that you make sure that your accounting system is up to snuff. Otherwise, it causes a lot of problems on top of potential false claims violations, and you don't want to end up on the side where, all of a sudden you're getting a letter from the IG or DOJ as far as a false claim investigation. DCAA audits are driven by the rules outlined in the FAR and the cost accounting standards, which is the CAS. DCAA compliant means your company has in place documented policies and procedures that are strictly followed and meet DCAA's requirements. Again, these can be found on the DCAA's website. An example of meeting some of these requirements is that your accounting system, it should be able to track costs separately, such as a direct and indirect cost, accounting costs, billing costs, and labor costs. So that's a very minimum requirement here, but it is something that you need to consider as you move forward and engage in especially DoD-based contracts. Again, a best practice that we recommend to our clients is to update the cost data contemporaneously with each project event. Another thing we recommend is that you're always reconciling your accounts and making necessary adjustments to your cost allocations. So for instance, if your contract calls for like progress updates or identification of cost by like a line item, it's really important that you take the time to ensure that the costs are being appropriately reported within your system. So again, these are just things that we see our clients dealing with that it's best to get ahead of if you can.
Sorry, I'm going to interrupt you. I know that you have a hard stop here shortly, and we have a couple of questions that our audience has asked. So I just want to make you aware that I'd like to get at least the audience questions answered before you have to hop off. So let me know when you want me to zoom through the slides.
Oh, okay, sounds good. I can zoom through the last two. I'm happy to do that.
Okay. So I'm not sure if these are the last two or are there more?
Yeah, these are the last two. And so, and this is just, you know, kind of a rehash of what I said before. It's really important that you provide ethics training and implement code of ethics and professional conduct policies. The reason for that is that there's actually a FAR requirement that you do that. So if the contracting officer reaches out to you and feels like there may be issues with certain employees and he's asked to look at your code of ethics, if you don't have one in place, that's problematic. So you want to make sure that you take a look at this FAR provision to make sure that your company is compliant. And then the last slide, and this is just, I mean, basic understanding. You really want to maintain a close relationship with your contracting officer. And this is the last slide, but this, I promise you, is the biggest problem that we see with our foreign clients that are doing business overseas. And the reason for this is because of contracting officer turnover. So they are the head of the procurement. There's oftentimes, especially in the Middle East, constant turnover by the contracting officer. So it is, and things get dropped and misplaced and misunderstood. So one of the best tips that we can give to our clients is that you make sure that you maintain a very close relationship with the contracting officer, that your communications are completed with the contracting officer either included or all communications are directed at the contracting officer. I can't tell you how many times we have a client that says, well, you know, the Corps told me that this is okay. That does not matter because they do not have proper authority to make certain contract decisions. So it is very important that you maintain that close relationship with your contracting officer and you keep an open rapport with them. Oftentimes that can be the #1 prevention to future contract disputes. So I will end with that slide, and I do have to jump in like 2 minutes, but okay, I'm happy to take a look. I will probably, if it's a complicated question, I'll probably say to just email it to me, or I can respond to you via email if that works. But let me take a
throw the question out there. It's a foreign-owned company, a European company that wants to do business in the US. They are required, or they were told they are required to have a physical location in the US first. Is that required? Do they have to have a physical office in the US in order to do business in the US?
So when you say they were told, who was telling the company that they had to do that? Was it the state or was it the federal government? I'm a little confused.
It looks like they were trying to register with the state. Okay, here there's Karen who's submitting this question, VSCC. And so it looks like state of Virginia asked them to have, it's a state level contract, and they were told to have a physical location in the US.
So, I mean, I can look at the Virginia requirements as far as entity registration, right, federal contract. I can take a look at that and see why they're giving you a hard time about that. I mean, every state is different as far as their entity registration requirements. Some states require that you have a location within the state, like a business presence. Some don't. So if it's okay with you, Karen, I'm happy to take a look at that and follow up with you.
And Karen, you have, I have Lauren's email address up on screen if you'd like to follow up with her directly. Please feel free to do that. We have several other questions, Lauren, but I know you have to hop off. So I'm going to hold on to them and email them to you. For the participants, thank you for your patience. Thank you for joining us, for the questions that have come in. We'll get something out to you by email so you can see them. I mean, there's so much information about doing business with the US government. What we say is start with all the free resources first before you pay anyone. There are tons of free resources, utilize them. It is overwhelming sometimes, but it's not difficult. So if you just spend some time and energy, it can be done. So Lauren, thank you so much for your time today. For those of you who have more questions, feel free to reach out to Lauren. Feel free to reach out to us at BidExecs and Proposal Helper. We are here to help you get into business in the US with the federal government. Thank you all. And thank you, Lauren, again for your time.
Thank you, everyone.
Thanks. Bye-bye.